Hi everyone, so here is a brief video on my forecast for Sterling Financial Holding Company, essentially Sterling Bank, FY 2025. FY 2025 means the 2025 financial year. So Sterling dropped its yesterday, dropped its audited FY 2024 numbers, first quarter 2025 numbers. So I just thought to estimate how do I think this stock will perform in 2025 and where do I think this stock should be trading. Now, Q1 earnings per share, essentially you can think of it as profit per share, was 38 kobo. If you estimate that this company maintains the same trajectory for the remaining quarters of the year, which are three in number, it means that you end FY 2025 with 1 naira and 52 kobo in earnings. As at when I drew my tables this morning, the stock was trading at 5 naira and 50 kobo. So at current PE or price earnings ratio, take 5.5, you divide it by 1.52, you have 3.6. The average PE on the exchange is 7 times earnings. So if you're going to assume that this stock should be trading averagely where the rest of the market is on average, yeah, so many averages, but you get my point. If you assume that this stock should trend up based on where the average PE ratio is, it means that the stock should be trading at 10.64, 10 naira 64 kobo. That then comes to a potential upside of 93.4%. But the proper way or a more standard way of valuing a bank stock is to say, what's the tangible book value per share? Meaning you strip away all unnecessary things and just take the equity divided by number of shares. If we use the formula you can see on my screen, you have a tangible book value per share of 6 naira and 99 kobo. Now, that then comes to a potential upside of 27%. But beyond capital appreciation, which is an increase in the value of your shares, you have dividends, right? And I try to estimate how much do I think they will pay for the 2025 financial year. 2024, they paid a dividend of 18 kobo, about 12% of its earnings were paid out. I think that that figure would go up to about 15% payout ratio, and that comes about 22 kobo as dividends for 2025. Now, one of the way you actually calculate a dividend is not just to look at how much you get per share, but what is the dividend yield, what's the return, what proportion of the company's share price essentially is being paid out as dividend. And so you take 22 kobo divided by 5.5, and you have a potential dividend yield of 4.1%. So if you're buying this stock, you're not buying this stock because of a dividend, because the dividend payouts are pretty small. I mean, in percentage terms, you're earning 4.1%, or you probably then 4.1%. That's way lower than inflation, way lower than the all share index appreciation and all that. So this is not a stock for dividends, except the price comes down significantly or the dividend goes up significantly to even things out. It's not a dividend stock in my view. Now, if you look at the potential returns using method one, you have 97.6%. Using method two, which is tangible book value per share plus dividend yield, you have 31.2%. I'm more inclined to the